All right, what's up, everyone, and welcome on this beautiful Monday. Hope it is beautiful from everyone for everyone where they're joining in from. Just real quick to get the legal stuff out of the way, reminding you guys all that trading stocks is inherently very risky. Neither of us on this show are licensed and professional. Trading stocks is inherently risky. Please do your own due diligence. All the information that we share today is for entertainment value and educational value. We are just glorified historians. Past performance is not indicative of future returns. Nothing is guaranteed in the market. With that being said, we all been trading stocks for 6 years, and again, we're glorified historians. We just going to talk about our personal experience, and hopefully that helps shape or give some kind of insight into your trading and your journey. Without further ado, again, I'm Mike Huddie. This is Dom Mateo, and our guest today is none other than Tim Grittani. Tim Grittani.
Hey, how are you guys?
So
Fantastic.
for those of you that don't know, Grittani is kind of a legend in the business. I'm sure some of you are pretty new and don't really know who he is. He's kind of been out of the scene for a year or two, but he's been the foundational building blocks to a lot of traders, like experience and knowledge. If you guys don't know, Tim Grittani, he released a course called Trading Tickers, and it's a systematic way of trading. It's very systematic, and it's very interesting to, if you watch it, you see how someone uses statistics to guide their way, to guide their knowledge on how a day should or should not perform, and use that information again as a guide. I've watched Trading Tickers front and back maybe 10 or 20 times. It's an amazing DVD, and again, just because you see it working for other people doesn't mean it's going to work for you. For me personally, I've taken some of the information from Trading Tickers and created my own way of trading. We had Roland Wolf on this episode, a month ago, and he told us that he took Trading Tickers and he flipped it upside down and found long strategies. I know that Dom got his introduction into OTCs because Grittani kind of shed some light that there was a lot of volatility in the OTCs, but I also know that Dom trades OTCs a bit differently than Grittani. It's very interesting to get these people's perspectives and the differences in how we all trade. That's why I keep bringing these people on. These are traders that I respect, that I've seen trade live, that I know are not full of BS, and have a very systematic way of trading that not necessarily is replicable. Well, that's not the right word. Replicable. But again, my goal here is to give you guys information, food to bring to your mouth, and then for you to take that food and eat it how you so choose to eat it. Again, Tim Grittani, welcome to the show. I wanted to bring you on specifically because I know you started trading recently, and that was interesting. I know you took 2 years off or so, and you had some family matters to attend to, which is awesome. Congratulations. Yeah. And then you came back.
Yeah, well, so I've never been totally gone. It was about middle of last year, but I'm a degenerate addict trader guy. So really, what my attention it kind of shifted quite a bit. We had second baby on the way, and I kind of knew already, like, trying to trade with at the time my 1.5-year-old, like it was different. Like I definitely was not quite paying the same level of attention as I had been in the past. So I was like, okay, with second kid on the way, like let's just really step away for a while and focus on family, because like you never get these years back. So anyway, when I was deciding that, a big part of what was fueling that decision was that I was starting to look a lot more into algorithmic trading and automating strategies and stuff of that nature. Naturally, of course. Well, because like I said, I want to be getting some piece of the action, right? So, so yeah. Speaking of, that's been like a 2-year project working on stuff like that with a coder friend from Puerto Rico. But really, it's been ups and downs. Like I won't lie, it's been much more difficult to get solid automated strategies than I thought it would be. But anyway, like I've always kind of had my finger on the pulse due to that stuff, and it's been nice because it's freed up my days. I'm not really watching the market nearly as much during market hours anymore, aside from like making sure that I don't have some algorithm catastrophe. But then like nighttime is where it's more like, okay, dive into the spreadsheets, the data, stuff like that, and see like what plays triggered, what's been moving, stuff like that. So I always have kind of an idea of what's running in the market. But yeah, so it's been like over a year of that. But every now and then I do have to pop into trade when I see some opportunity that is just too good. And so
And
yeah, like when CEI got going like that.
now, before we get to CEI, I did hear you say something that, you know, might be interesting to the people watching this, and you said that you've had some ups and downs with your algo.
Oh
Meaning,
yeah, absolutely.
I mean, what trading stocks is not 100%, like that it's actually a
Oh
game of
no,
odds, and
no, no,
sometimes
not
bad
at
things
all.
happen.
So I mean, well, honestly, like a big part of the reason I think I've struggled with it so much is because I'm kind of just adjusting on the fly as I go. Like I haven't really put together a solid framework for back testing because a lot of the stuff, like honestly, I just don't know how. Like it's just a little too complicated. Like the criteria I want to plug in to say this is a play. So
Yeah,
I have no
get
idea
really
how to go back to like 2019 and test one of these things from that entire year and see like what tweaks might be worth making. So really, it's just adjust on the fly every month, every 2 months, and just kind of see what data I've got and what adjustments I can make. So you want to talk ups and downs? Like for quite a while, it was only long strategies, and you know, ups and downs through a lot of. Is it 2021 now? Yeah. Okay. So.
yeah, tough to keep track of the year.
But yeah, so 2020, you know, a lot of testing, a lot of really small trading, finally get it live. And by the end of 2020, the longs were close to break even. And then January, February were absolutely nuts, right? And I know I've texted you a bit about the algos, Huddie, and I know I sent you a screenshot one night where it was long something like 30 different tickers overnight. Like
And I think I sent that. I showed. We were shooting guns for Roland's birthday, and I showed Roland. I was like, "This is Grittani's day trading portfolio." It was literally like 6 stocks.
Well, and that was it. Trying to play afternoon breakouts, multi-day breakouts. I think those were the two strategies, but still, like in that market, like it was just way too, like it kind of worked in that market, honestly. Between January and February, it made 900K, which I was like, oh my gosh, I struck gold. Like I'm a freaking genius. And then it just bled and bled and bled since the market turned in March. And, you know, because I haven't had the ability to do like the crazy back testing, you know, part of the problem was that crazy data from, you know, December, January, February was really overwhelming the slow months.
Right.
Because not only was it, you know, less runners, but it was just less plays. So, you know, I had as many plays from March until September as I had like in that 2-month time frame of January, February. So and so, you know, it was like, okay, how do I adjust these strategies to, you know, the first idea was make it perform well in both hot and cold markets. But then the new idea that I've kind of latched onto that I think is a lot better is having 2 separate strategies. So like I'm going to have different criteria for breakouts in a hot market versus cold market.
Interesting.
So it's a matter of having a definition at the start of the day of like, hey, does the market look hot or cold today? Because think about it, like if you're in an environment like January and February, are you gonna probably be a little more loose with what breakouts you want to buy? Yeah, because like everything's running, everything is chasing.
And if everything's gapping up, like you can make a lot of excuses to buy something.
Yeah. So that's kind of my newest approach. So I made an adjustment to my long strategies in August or September, where I did put in some kind of criteria where I would try to define at the start of the day, is the market hot or cold right now? And it's been taking way fewer long plays since that, and performance really has stabilized on the long side, which has been nice to see. But then, of course, now we're into trying to get all the short selling strategies up and running, which is really
awesome.
Cool. DAS Trader has an API, so you can hook it up to Cobra, Centerpoint, Speed
I'm just
Trader.
trying to figure out how does an algo locate shares for you, short stock, control the risk, you know, halts.
And that's where my coder guy comes in. Like a lot of credit to him. He's incredibly smart and he figured this all out. I guess it wasn't super well documented, but like it is entirely possible. Like we have it now where like just this last Friday, like it saw CEI. And you know, it met some criteria for a short. So
really?
it did the locate. It figured out, like it hit the locate routes of all 3 brokers in less than a second, figured out what the cheapest locate route was, located the shares, put the order live and filled. Like it was so cool. Like so it's like anyone who's into the coding stuff, it's entirely possible. And you may want to go down that road.
And I do want to
coding for the life of me, but you know, it's pretty cool.
It's another aspect, and there's so many ways to make money in the stock market, so many patterns, so many different avenues. It's really like the world is your oyster, and it's about finding out what resonates best with your mind. Like Grittani's a very analytical person. You should see him play fantasy football. Like he plays at the same he's very analytical. He's very You know, and so he used, like we always talk about, taking our strengths and making them stronger instead of like trying to make our weaknesses strengths, right? And you keep diving down into this analytical approach and keep improving, you know, your force swing instead of, you know, figuring out different ways to trade. You're just like, hey, how can I automate what I do? Because that's kind of how I created all these things in the first place. So again, it speaks to like strengthening what has already been a strength of yours instead of like focusing on what's been weak and trying to make that a strength. We always talk about that. And the other thing that I heard you say was, you know, it did really well in January and February, and then it kind of dropped off the radar. And
yeah, like, and just to be fair, like it's lost over half of those January, February games. Like I never said the bad number, but yeah, it's gone from up 900K to now it's only up 400K. So,
well, that's the beautiful thing about systemized. Like it's only up 450K. Okay, Crimea River, but it's still up 450K. Okay. But more importantly, like it speaks, like if you are new and you started trading in 2020, or 2021, either of the years, which I imagine a lot of you have, like there are such things as hot markets and cold markets. And like, I kind of always talk about this, like if you do really well in a hot market, like that's scary because when it gets cold and you're still using that kind of size and that kind of confidence, like it can turn on the dime for you, which is why it's so important to like have this like longevity of a career goal here. It's not just like trade a bunch and get as rich as quick as you can, because there are hot and cold markets. Like losing streaks are to be expected, losses are to be expected, and it's not just like human error. Like to some extent, like your algorithm's making the mistakes, right? It's not even mistakes. It's just this is how games of odds kind of work out. And the more you refine and critique that criteria, hopefully the bigger your win rate is, right? Which is what you've done really well. You really take a broad concept and narrow it down as much as you can so that A, you limit your over trading, and B, you're focusing on the most impactful type of setups.
Mm-hmm. Yeah, absolutely. And that's been one of the weaknesses with my algorithms is I think that they're just catching too much. So yeah, I'm still working on it, but it's a fun challenge.
So
Tim,
let's get into TEI. I'll let Dom kind of take it from there.
Sure, Dom.
Oh, no, I was just going to go off of that, like, because I'm interested. I'd known you were messing around with an algorithm, and I know it was at a busy part of your life where a lot was going on, and maybe you didn't want to be at the screens all the time, but has it always been, like, your goal to automate this, to really, like, we always talk about simplifying our trading, but we've never gone into the algorithm route, just, like, making things as simple as possible, like, narrowing our focus so much that, you know, the execution is much easier, and the user error is a lot tougher to come by. Like, is this something you see yourself going more into, like, so you don't have to be like a day trader per se and it's doing most of the heavy lifting for you? Or do you plan on becoming more of a full-time trader again where you're actually clicking the buttons yourself?
Yeah, that's a really good question, and that's something I kind of am struggling with a little bit internally right now. I'm figuring out where to go from here because, you know, on one hand, I feel like there's so much potential with the algorithms, and if I can get those to a point where they're more consistent and I can size them up a bit, you know, kind of why not, you know, try to live life and enjoy life a little bit more with things. But at the same time, like if I look at where things are right now in this point in time, where, you know, I come in and I make, you know, more in a week's worth of trades trading live than I've made all year on these algos, it kind of feels a little silly. So, I mean, I've had ups and downs in my career, like mentally with trading, where, you know, things could be going really well for me and I could be trading really well, and yet I just feel like in the pits and so mentally burned out. I'm like, I've got to get away from the screen. You know, I feel like I said I was kind of joking at the beginning, but I kind of wasn't. Where I said like I'm kind of like an addict trader. Like there's such an addictive component to it. So even with the algos, I fall a lot into the trap of wanting to watch what's going on with them during the day rather than just kind of set and forget. So yeah, like down the road when I have a little more free time again, could I see myself trading more again? Absolutely. Do I ever see myself doing it completely full time again? I'm not really sure. I can't imagine it for a full year of full time trading. But maybe, you know, a couple select months here and there where, you know, if I'm still running the algos, I can kind of get a feel from them like, oh, hey, the market's heating up. Maybe I should show up to my desk.
Yeah, and that's kind of where I've gotten into, like, this last year is like, this is like my 6th year trading, and it's like I'm finally starting to feel like I don't need to trade all the market cycles. Like I took off a lot of this summer for the first time, like, and was okay with the fact that I'm gonna miss plays, but the fact is there's gonna be a lot less plays, especially with how hot the last year and a half was. And so it's interesting to see where we all go from here, because I definitely can't see myself trading completely, got my train of thought just went completely gone.
Full-time trading.
So what?
Full-time
I
trading.
get what you're saying,
No,
though. Like, yeah,
but
like
it's
the whole full-time trading thing becomes less appealing for sure.
yeah, and it gets easier to kind of step away. But where I wanted to go with that was when you do come back for a CEI like trade, what is it that like gets you to like know that this is an A++ setup for you? Because I feel like for you to come back and put real size on, especially if you said you made more on like the last 2 weeks of trading than like your algo made in a year, like what is it that brings you back to it? Because it's probably not just a typical OTC breakout like something I'm looking at. And I know you push more size on these first red days and overextended, like really in play runners. Yeah, go through that process of re-entering the market and getting ready to just push size all of a sudden out of nowhere.
Yeah. So, well, so first of all, the funniest thing is, like I tweeted a little about CEI and I was saying like, oh, it's the short I'm really excited for. I never shorted it. Like that, I kind of
I knew you were going to say that too.
Yeah. So it wound up being just the long that I made the money on, and of course I was not happy with the exit. But what I saw to want to enter the long, it just comes from historical experience, really. So I kind of got clued into it from looking at the algo stuff, and my automated stuff bought a couple of the early CEI breakouts back when it was like around $1 or a little bit under, or a little over. I can't remember the exact points now where it bought, but it kind of caught my eye then because like of course I recognize the name CEI. Like I made a YouTube video on CEI a few years back. I'm very familiar with the story of what a disgusting company CEI is.
And what's cool is like the more you trade, like the more you start to become friends with some tickers. Like you actually know them, you've taken them to dinner, you've wine and dined them, and like how they act, what they're trying to do, like just because it's the same story, 5 years later, which is what Grittani is kind of alluring to right now. Like he made a YouTube video about CEI like 3 years ago. I remember watching it, and a lot of what was in that video still pertains to what's going on today. Sorry, I didn't mean to cut you off.
Oh, you're good. You're good. So with CEI, I think fast forward a week or two, like after the algo has made its couple trades on it, and I'm still kind of looking at the daily chart, and a lot of times what I feel like I see with these listed stocks that have breakouts and, a bit of a run is you'll see the breakout, you see a few days of really significant volume, and then the volume just kind of fades off and gets really illiquid, and then you just kind of forget about it till the next PR.
Yeah.
And CEI, I just kind of like woke up one morning and I'm looking at this chart and I was saying, okay, wait a minute. Like this thing has been trading 100 million share plus days for weeks now. Like everybody knows this thing is like a massive dilutive pig. Because I'm seeing all these short sellers tweeting about it on my Twitter feed. And there's got to be an agenda here to want to dump some of these shares that they're converting. And so I'm watching this volume sustain. It's just had something like 3 like really small red days in a row where it's still just holding up and putting through like just all this volume. Like it made no sense. Right. And so this is where I kind of say experience came in, because I was trying to think like, what have I seen this with before? And I thought about NAKD and SNDO, which were ones that I had also kind of popped out of my little retirement bubble, end of 2020, early 2021 to try to trade.
Right.
And so when I started to draw that comparison, and then it is having this pre-market gap up again on like no news whatsoever, and I'm just putting all these pieces together and I'm thinking like, okay, they're going to break this out again. Like this has been grind, crazy volume. Like this looks exactly like these previous ones that have had big blow off tops at the end. And, and there's no reason this thing should be up or holding up. Like someone is playing games with this.
Right.
And when it's volume like that, it takes more than a room like Atlas. Like, yes, you can scream at the top of your lungs on Twitter, like, oh, like CEI, they have carbon capture. I don't even know what the story was they were trying to spin, but like, that's not going to sustain 100 million share volume.
Right. Like a million shares a minute. Like that's not just retail.
No, that's not just retail. That's someone big playing with the stock.
Yeah.
So I kind of just put all these pieces together in my head and I was like, I got to find an entry on this thing. And part of the appeal on CEI on the long side was that I had enough conviction in it when I put all those pieces together that it wasn't something I felt I had to watch every single tick and be glued to all day. I put my entry in with the swing plan. Like that was kind of the thought from the start. Like I thought it was going to take longer than it did. Like I really thought I might be holding it for a couple of weeks. But
it's such a big deja vu. I feel like you say that all the time.
Well, yeah. It was quick. But yeah, so that day where it's randomly gapping up and it hasn't really had that breakout yet, I just waited for a dip where I could buy the dip and I could risk it off of. I think I was using the low from one of those previous 2 or 3 red days as my risk.
Yeah, just like a wide
Where
risk.
really, like, I wanted the daily picture to be holding up,
Right.
and I didn't go crazy in size right off the bat. I think I originally sized it into about 15K risk, maybe 20K risk. I can't remember the exact number now, but I know that I wasn't like, okay, I'm in, and if I have to cut the loss, I'm going to lose 6 figures. Like, it was nothing like that. It was I just took it in pieces, and then it did, like, after the dip that I bought, it did start to, it recovered, it broke to new highs, it kept going, and I just kept looking for dips to add throughout the day whenever I popped in front of the computer, because it was working. And then it did actually break out past its multi-day high, from the time that it was having its crazy volume startup. The number was somewhere in the 180s, I think.
Yeah, and what's cool is you had a bit of a different mentality here. I mean, you used to say it all the time in trading tickers, like, when you get into your position, you should know right off the bat. Like, you obviously don't know how the day is going to close, but you should know if this is like an intraday trade, a swing trade, if you want to hold it overnight. Like, you should have a general idea of what you expect from the stock. I know that I was buying it at 75 cents and I was locked into the day trade mentality and ended up selling at 92, even though I kind of was thinking the same thing you were way back when, and was starting to set up with so many shares being traded every day. But deciding beforehand, like, okay, I want that wider risk and swing mentality, I think really helped you stay in the trade past that, fake out red move the next day.
Yeah, it gapped down the next morning. And you're exactly right. Like, that was what it came back to in my head. I was like, okay, yes, this is a little gap down, but daily, like, nothing's really changed here. I still think this needs a blow off top, and all those other factors I just talked about, where someone is clearly doing something weird with the stock.
And I always
So yeah, it was just a matter of building in as it went in my favor and moving my risk a little bit along the way, and just trying to keep myself comfortable.
And I always talk to, like, people sometimes ask me, like, when I'm in a breakout scenario trade, they're like, what's your risk? And I was like, honestly, right now, like, this isn't the scenario every time, but a lot of times my answer is, like, I'm looking at the daily chart right now. I'm not looking at the minute by minute chart. And until that daily chart doesn't look good anymore, I don't really need to be concerned with the risk side of the equation. But, like, if we got like a red doji candle for some reason at the end of the day, like, I got to be worried, because that's not going to look like a good breakout chart, right? So sometimes it is just like, how does it look on the daily chart? Like, is it still intact for what could be potentially there? And I find myself doing it more and more now, where I'm just like keeping an eye on that daily chart instead of like watching the level 2 for every minute and watching every, like, minute by minute chart movement. When I know I'm in a big picture idea, that's what Dom and I usually talk about: big picture concepts, big picture ideas. You could sit patient in them. They're much easier when, instead of like trying to day trade and scalp for a couple pennies.
Yeah. What Grittani did was, before he thought about entering, he put together all these criteria, all these factors, reasons why the trade should work. And what I'm kind of grasping from you, because we talk about these big picture, like, once the stocks kind of ran and they consolidate on lower volume like that, like, we get really interested. And it's funny because Huddie always talks about, like, the Grittani way to play it and the Dom way. Because, like, my idea would be to get in as close as possible to that risk level on, like, a momentum shift upward, and then, like, maximize risk reward, and that's where I'd get all my size. For you, it kind of seems like once you knew you wanted to be in, like, on that gap up day and breakout, like, you're just, like, getting it on a dip somewhere and just making sure you're involved with that wide risk. So that way, because you have this big picture idea of what you want, and you don't want it to stop you out randomly, because these are choppy, especially something like CEI. Like, once you know you want in, you're just getting involved somewhere on weakness, so you're not just willy-nilly getting in. But that wide risk is what keeps you comfortable and allows you to stay in the trade for that, where you don't have to micromanage it.
Absolutely, yeah.
And it's
and like, I mean, like, so I kind of touched on this a little bit. Like, a big part of me taking all this time off is, just to spend more time with my kids. And so, yeah, like, when you're focused on stuff like that, like, you're not going to be glued to it tick by tick like you need to be. So it really does have to be the wider risk, big picture idea.
And I've been doing it more and more lately. Like, once I identify the setup, identify the trigger, and identify my risk, I've just been buying breakouts and putting stop losses where they need to be and walking away, just so I don't have to. My biggest problem, and Grittani, it's a psychological thing. My biggest problem, Grittani and I have talked about this so much in the years past, where it's like, I don't necessarily stick to my risk that I planned for in the beginning. Like, if I'm watching it like through midday and you get that illiquid pull that like means nothing by the end of the day, but it happens midday and you're watching it, like, oftentimes I'll start trimming some of that position because I don't want to take the full size loss or whatever it is. And what we really, created for myself, which was that Project 1K risk idea, where it's like, no matter what, like, I got to lose an amount that I'm okay with losing, and I got to stick to that idea so that all my losses should be a consistent amount. And it's been one of the biggest things in my trading, since we discussed that back in, I think it was March 2020 when we were having the COVID runners, where it's just like been able to just stay so much more patient and allow like again, like my biggest issue, and I'm sure this speaks to someone in this who's viewing this, that like you trim back, like you get uneasy, you get unconfident, like you take half off or you take it off before your risk is violated. And the worst thing about that is like you stop playing the statistics. Like you're immediately putting yourself in a pool that doesn't make any sense statistically speaking, because you're not letting the plays play out. You're not using the risk that is triggered to be a good idea of a risk level, and you're not allowing the setup to really form and giving it the time that it needs. Whether you're right or wrong has nothing to do with it, right? Like your emotional judgment calls midday really shouldn't change the setup and how it reacts.
Yeah, I haven't been watching as closely as you guys like over the last year, obviously, but like from what the bit I've seen, it seems like there's a lot more fake outs, like fake weakness and stuff like that. It seems like it's even more choppy than it used to be.
I've seen a lot of red days after a breakout, a red pull at least.
Yeah, red morning and then immediate recovery. Like after watching Trading Tickers, I remember I used to only trade like the first 2 years I traded OTCs. If it was a breakout, I would sell on a red move every morning. Like that was my risk level. Now you're crazy to use that as a risk level because it's almost guaranteed. When was the last time I saw a gap up, Huddie? But tons of these breakouts are working. You just have to sit through like an hour in the morning on each continual day of the move and then let it figure itself out and then get back into trend. And that's definitely something I noticed this year where there's like no super clean runners.
Yeah, and like I haven't even attempted to do OTC algo stuff pretty much for that reason.
Well, yeah, and that slippage could be really extreme sometimes.
Yeah.
But let's talk more about CEI and kind of get to the whole idea behind it. So you're telling me that, and I know that you already think this, but CEI is the worst company in the market. And maybe not the worst in the market, but I'm not exaggerating that much.
So as far as who they are as a company, like what they say they do, like I honestly don't know too much. I'll be totally upfront about that. But as far as the share structure and the dilution that's present, I think they're one of the worst in the market in that sense.
And share structure is oftentimes your variable that's going to influence price action. I mean, you see it all the time, like low floats can go crazy. The bigger the market cap you have, it's probably not as volatile of a runner. All that kind of goes back to share structure. And again, CEI has got one of the worst share structure situations in the market, but that doesn't mean it can't run. In fact, it's those kind of situations that can probably squeeze the most. Wouldn't you agree?
Oh, yeah, because that's what sucks the shorts in.
Right.
They get all this conviction because of the fundamentals, and they kind of ignore the technical picture of what's going on and the trap that's being built. So for a really long time, CEI, they had their authorized shares capped at 25 million.
Right.
And I honestly expected like a big run out of CEI when that was the case. Like not too long after one of their splits, I remember taking some long trades on CEI back around then, thinking like, okay, they're going to squeeze it here because like right now it's really squeezable and they can't dilute further. And it never really materialized. You had those couple top outs in the like $4 and $3 area. And then somewhere along the way, I know they had a vote to increase authorized shares from 25 million to 250 million. And the number that I've been seeing for most of this run for outstanding shares was somewhere in the 110 million range. I can't remember the exact number.
Yeah, I saw something similar.
Yeah, but so we kind of knew like, okay, they still have quite a bit of Series C, right? That was the yeah. So we knew there was quite a bit of that they could still convert and get that authorized share, or get the outstanding share all the way up to authorized. And lo and behold, the October 6th 8K that comes out updates and says, oh, our outstanding shares is now 249 million, mostly due to conversions of our Series C preferred stocks. So, you see everybody crying about the Kerrisdale short report. No one's really stopping to think that outstanding shares has more than doubled, and it came from exactly where Kerrisdale said it was going to come from, because this has been going on for years.
Yeah.
What was the filing? There was some filing where it was like if all of their Series C was converted, it was like billions of shares, like billions of outstanding shares. Yeah, I can't remember the exact filing now, but it was really funny. It was one of the most ridiculous things I've ever seen.
And it's fascinating. Like for me personally, like it's honestly like entertainment. Like grab your popcorn and chips, because like if you go to the Kerrisdale Twitter and you read their short report and you read the comments, like it really makes me doubt humanity to some degree, because it's like there's so many mean comments that like Kerrisdale's like this like devil sent from the past to cause a reckoning or whatever it is. And I'm reading, like, again, I don't know much about their business at all either. Like, I'm in the same boat as you. I care about the share structure, and like what they said about the share structure was not false at all, and everyone's like, you need to check your facts. You're going to end up in jail. Like, all the Zach Morris fanboys are just like coming after Kerrisdale, which honestly, like, from what I read, they're not really telling a lie. I don't, in my opinion, I'm not, the person that can really like say what's right or wrong, but it's fascinating. Like the amount of uneducation out there and how strongly people believe in that. It's like, educate yourself, like instead of like just saying that they're the worst, like, why don't you actually do some research and look into what this is and see if you can see some similarities with SNDL, with NAKD, with a number, NNVC. Like there's a number of these in the past that we've seen that we love to short sell because there's so much misinformation.
Right. And, like, I'm never going to hate on people buying momentum or, riding a stock up. Like we've seen so much go so much further than we think it can. But like, man, like when you get that thing topping out in 480s and then dropping down into the 3s, and then you still see all that garbage on Twitter about like, oh, there's no reason it can't go to 90. Or someone, it might have been Zach. Someone said something about all-time highs. Like it was one of those guys who like are one of the leaders. Said something about all-time highs, which for CEI after all the splits is like in the millions or something. Like
5 million. 5
million.
Yeah.
So like that stuff is really sad. And I kind of wonder sometimes if like rooms like that where they get super popular, like it might just be timing luck. Like the ones where you've got like the like brainless like buy anything commentary. They happen to stumble across a hot market and then they look smart for a while and they get a huge following and turn into the biggest pump and dump, out there. And
it's impressive the amount of following that he's created. And I also saw some comments out there where like, CEI is the next like AMC and GameStop, and Kerrisdale Capital needs to sit next to Citadel or whatever. And it's like, okay, I know where you're getting this like short squeeze idea from, but like, you understand that AMC and GME are like real companies, to somebody. They don't have toxic spiraling dilution involved. And maybe they are diluted, but they're not like CEI level of dilution and CEI level of non-real company. I mean, there's quotation marks there. I'm sure it's maybe real, but like it's not an AMC or GameStop, which can stay solvent. You know what I mean?
Yeah, absolutely.
So it's fascinating. And then, so I guess the next part of your trade is like, I know you focused on CEI and you kind of rode that strength up to the 2s and the 3s and you did a great job. Congratulations. I know there was a couple sympathy plays.
Well, hang on really quick. I've got to talk about the Olympics. It's just so bad. And because like, I can't leave everyone with the impression that I sold it before or anything like that. No. No, it was, let me look at the Twitch really quick so I can figure out which day it was exactly. I want to say it was the second to last day. Something like that. Whatever. Yeah, the morning where it went red.
This one.
Like it opened up, it gapped up, opened strong, and then had like that little mid-morning panic. And it does that panic as I'm driving, of course. But it was, it's just one of those things where at that point, like that's kind of where that trade gets really hard for me because at that point it's topped out. It was over 3, right? When it topped out.
And then it pulled really harsh below the day level.
Yeah. So at that point, it had run almost 100% from my entry. And then it was having a big, terrifying looking crack. And I kept I think it had 2 or 3 bottoms before it finally went red. And I was sitting through them like, I still think this can save. I still think this is going to save and come back. And it just had that one more dip than I expected, where it did take itself red. And that's what got me. So I had a really bad sell into weakness. Now I still I did really well on it, still overall money-wise. Can't complain about the money, but I'm always I always hold myself to a high standard when it comes to execution. So it definitely hurt when I felt like I executed so bad.
And I always tell people I'm like, we're not here to make money. We're here to trade well. And I know for you, trading well is like shorting strength and buying dips, not the opposite.
Yeah.
Or maybe I said that wrong, but you basically sold into a dip, and like that bothers you more than like whatever the money made. Like just it is against how you like to trade. Generally.
Yeah, and I mean, but at the same time, I guess it does also speak to the whole meat of the move thing. Like I think I wound up catching like a third of the move, like from entry to as high as it went, and I still made like 260K on it. I think so.
Amazing.
That's all you've got to do in trading, really. Like
I mean, you took some profit from the
perfect. Like you can be aggravated as heck, like I am when you're not perfect, but like there's plenty of room for imperfection and still having really good results.
And that's what makes this job so cool. I mean, like there's just so much freedom to be able to be your own trader in so many different aspects. And it's really just you versus yourself and how bad you really want it at the end of the day. So you went from CEI, you had some sympathy plays. I know FAMI, STPI, and a reshort on CEI. Do you want to talk about any of those, or do you want to just open up the question and answer? It's
I'll talk FAMI. Well, also STPI, I guess a little bit. That was just I texted you about that, and you were like, "What are you looking at, Grittani?" Like you were really confused about why I was buying that, and that I was in that on the first day where it was probably only trading about 5 million shares by the time I bought it. I accumulated a good amount of it because I kind of thought like that was where the chat rooms could go next, and it had the nicest daily chart I thought out of like anything that was potential sympathy. So I just accumulated a bunch and had a couple days swing plan for it. And then it did that crazy after hours jump to the twos. And I only trimmed off like a tenth, around $2 after hours. I was in from 120, I want to say. And then the next morning, by the time it opens, it's opening in like the 150s, and then it opens really weak and it slides down towards red. And I just did the exact same garbage I did on CPI. I just got really exasperated and was like, oh my gosh, I just let this come back on me. Like now it's probably gonna go red. I'm just gonna get out. And so I sold the rest for like break even.
That's what's so tough about like going for that like swing and home run. That's not really a home run top, but just going for that swing trade, because like what it is like your unrealized profits start like really adding up. And like when you see like 30% of that disappear, you're like, well, what can I still salvage here? You know, your brain immediately goes to that.
It's killer mentally. It is killer.
It takes a lot of strength to stick with it and say, hey, like this is part of the plan. This is, you know, part of what I planned for. So, you know, it's tough.
And it was nowhere near the same conviction as I had on CPI because like it's just a sympathy play, right? Like that after hours nonsense, and then you know week open the next morning, like that could very well have been it. Like I didn't have any real expectations of a multi-day like craziness. Like I just thought maybe doubler and then that'd be it. So once it doubled and then came back down, I was like, well, I screwed up.
I didn't sell. Now, FAMI is an interesting one. FAMI, I really understood, and we can talk about it in terms of like what volume, piece of crap company, dilutive, like terrible chart to be buying, like.
And multi-day breakout. Well, it was a multi-day breakout.
It was over 30.
Yeah.
So you know, you found this one, and I think for me, like what kind of tipped my hat off about FAMI was just like how bad of a dilutive and piece of crap chart it was, which just reminds me so much of CEI, and then all of a sudden like that volume. And I'm sure that volume speaks to you too.
Oh, the volume really spoke to me. Yeah, I loved the volume it was trading. And it was one of those cases where the intraday breakout really aligned pretty well with the multi-day breakout past that 30 area. So we were texting a bit about that one that day. And I think at first I was like, oh, I don't know if I want anything to do with this. And then like as the afternoon went on and it stayed strong, I was more and more like, okay, yeah, I like this. So the dip it had that afternoon was what, the 26, 27 cent area?
Yeah, 26.
And then the break was past 30 cents.
Yeah.
So I just bought on the break and decided to risk the dip. And this was, you know, fresh off of a good CEI trade. So I just decided to go a little bit bigger because the volume was there to go bigger. You know, I was like, let's just risk some of my big gains on CEI.
Love it.
And everything about it just seemed like it was primed for a gap up. So
and we talk about
it made it much easier that it broke out so strong. You know, if that breaks to like 31 or 32 and then just chops around, I think I probably sized down before close, but like that went up to 36, 37, something like that. And
little bananas.
Yeah, and then bananas after hours. So it made it very, very easy to swing it. And that one I actually did a good job of selling the strength. I learned my lesson after the other two.
Yeah,
like I'm paying myself out strong.
And it's easy to pay yourself on something like FAMI because like, like normally we're not touching that with a 10-inch pull. And
we knew the fresh dilution was
there,
that too. Like that was like very fresh dilution. They had just done an offering in the last week or something like that.
And I remember like what you had told me at one time in our careers, it's like you told me like obscene volume situations like perk my ears up more than like if something, even if it is dilutive, if you're going to trade like a bunch of volume, hold your highs, sustain a good look to the chart, like it's going to be interesting. It kind of is. And we see oftentimes like, you know, once or twice a year, we have one of these piece of crap tickers that goes really crazy. I remember texting you about SNDL in the 20 cents and you're like, oh, that's the worst. Like I hate their share structure. I hate their chart. And then, you know, SNDL goes to $4. So again, just being on the right side of momentum, like sometimes you just get some really good risk reward attributes to like, you know, like FAMI's like all time 52-week lows. Let's just call them 52-week lows is 20 cents. And like the breakout's like 25, 30, like it's pretty good risk reward if you think it can gap up and go further, because CEI is kind of helping it go along its way. You can really formulate a good equation in your head there and size into that kind of idea.
Oh yeah, and especially because that volume is there. Yeah. It's another case where just kind of all lined up.
Cool. I mean, that's a wild, it's just wild that you can come back for just like a week or two, make your dollars, and then again get back to the family and then back to living your life. We were talking about like why this can be the best job, even though it has its ups and downs. And like, let me like make no mistake, like there are down moments in trading and there are highs in trading, and the lows are very low sometimes. Like it's a very real thing. No matter what level of your career, like you're going to go through lows. Like people that have been trading for 15 years and blow it all up in one trade, and like I can't imagine what that's like. You know what I mean? So it's really cool that you've gotten to a point where it's like you can detach for the most part, focus on where you need to be focused, and then come back and like be so solid in what you have to trade. It's impressive. It really is. I know for me, when I get back from like, I go to Europe every summer and I leave my laptop at home. I just don't even take it with me. I'm like, I don't even want to look at them.
That's smart. That's really smart. Yeah.
But then like my first 2 weeks back trading, like I'll have 7 different positions in a day. And I'm like, wait, what am I doing? Like, I'm like hawking the scanner. I'm like hawking my watch list. I'm like adding every single ticker. And all of a sudden I'm in every single position. And it's like, I have to go through 2 weeks of just like disgusting trading to get back to like 1 trade a week, and make sure it's a good one.
Yeah. And like I won't give the impression that it's always been like this for me. Like I've definitely had periods in my career where I've been taking time off, for one reason or another, and I get bored and step in and trade like a B- setup. Like I tried to trade CEI, where I'm like, I'm just gonna buy dips, and then sometimes slip into situations where it's like, oh, it's not going the direction I want, but hey, let's buy more dips. And I've got this big position, and then it cracks, and I'm like, oh crud. Like that happens to me. And part of the reason I think I'm a little more solid now is because I've gone through that and done that enough times. Like you touch the stove enough, you're gonna stop touching the stove.
Right.
So like I've done that too, man. Trust me.
And what we do is we call it walking a dog. Like sometimes you enter a position and it's like going out and walking your puppy, and then before you know it, you turn around and your puppy is a fire-breathing dragon, and you have no idea how you got into the situation. Yeah. It happens to me a lot with shorty and low float first screen days. Like it's just like it starts off pleasant, like a cute idea, and then all of a sudden I'm oversized and it's going wildly against me, and I'm like locating more shares all of a sudden. You know what I mean? And it's like just probably the scariest trap to get into as a trader. Adding to losers and like trading outside of a plan, all that good stuff that we always talk about not doing. We still do. Right. Admittedly, we still do it. It happens. We're human, and emotions and the degen in us takes advantage of our fingers. And it's very unfortunate. But again, this is such a great job because like you decide when game over. Like don't let the game tell you when it's game over. Don't blow up. You know what I mean? No one trade is ever worth your whole account. No one trade is worth like a month's of work. Like there's always another. This is what I wish Grittani told me, 5 years ago when I first met him. Like, Huddie, relax. The market's not going anywhere. There's going to be a great setup around the corner. Just give it time. I remember being a beginner and just being like, oh, this is the most perfect, like overextending gap down. Like I have to have the most size and I have to nail this one. And it's like, there have been thousands more that are equally as good and produce equally as much value. So like literally no one play is ever worth it. Although there are situations and unique scenarios where you can take a bit more size. Maybe you've done that thing where you've built a cushion up, so you're willing to take more size on a trade. Maybe your confidence is up because you've been nailing a certain pattern over and over and over, and it seems like it's hot and all the day traders want it. Like there are some, maybe it's the picture perfect, CYDY, like a month-long run from like 50 cents to $10, and you really know how to trade that first red day. There are situations to be more confident than others, but there's never a situation to let that bleed into a loss where it can get really bad really fast. I always say like tomorrow can be your best day. It could also be your worst day. You know what I mean? And always knowing that there's a double-sided sword there, and it's a great thing, and it's also something to be very aware. Something that Dom and Grittani, you guys do really well is you think risk first. You don't think profits. If this goes to 10, I'm going to make millions. It's like, no. If this goes under my risk, how much am I going to lose? And that's where you guys start with most of your trades, and that's what you guys actually do very similarly. Just Dom wants to get in as close to that level as possible, and you're waiting for that trigger. That's the only difference.
Yeah. No, I agree with everything you just said. And
so go ahead.
Well, I guess one more thing. Sorry, I'm sort of switching topics on you for a second here because I just thought about CEI again. Something you said made me think about CEI again. I think you were talking about like adding losers and getting caught in like bad situations. And that just kind of made me think about, like, that's part of the reason why I did wind up missing the CDI short, because, you know, I said I was looking for below off top, and like 485, yeah, that's pretty darn good.
Yeah.
But like, I was really thinking like another big gap and blow off top day or something like that, like a little bit further, something really special, something to like really make me like need to be in front of it and like, you know, like dedicate one of my screens to like Coco Melon videos for my kid or something while I'm trying to trade a CEI short. And yeah, like at the 485 point, like it just hadn't quite clicked that for me yet. And I know myself as a trader, like if I put myself in a short CEI in that position, and I feel like I can only half watch, and then it goes against me, I'm a lot more likely to slide into that, like, oh, well, it's trash, it's dilutive, like there's all these reasons it shouldn't be going. It can't go that much higher, right?
Let's just hold for
And then find myself in one of those headache situations a day or two later where it's like, whoa, it has kept going. I have way more size than I should. And how'd I get here?
Yeah, right. Someone wake me up, I'm dreaming. What's funny for me about CEI, and if you go to that daily chart, is like I know how to short that first red day where it kind of, you know, had that real significant trend change. It crashed, you know, 50% or so intraday. And the next day you had that nice gap up, and you have kind of the, you know, previous day's highs to use as resistance and judge some kind of risk reward scenario there if you do think it's going to unwind for a bit. And I was kind of in my own state where I was distracted with poor trading elsewhere and not kind of focusing on the biggest runner in the market, which is like, if something's volatile and there's a bigger runner in the market, like whether you trade it or not, fine, but like you should probably watch it. You know, if it's a micro cap stock and that's where your focus is, and it's like trading billions of shares a day and it's the biggest runner for the past month, like whether you know what to do or what not to do, like watch it, because it's going to teach you something down the line. I missed that $4 short completely. I mean, again, I was just doing something else and not focusing in the right area. But then I realized, like, what has Grittani been doing really right this past week? Why has he made so much money? This is literally what I thought about at my house. And then I realized, like, Grittani comes on and watches the biggest percent gainer in the market, trading the most volume, and then finds things that are correlated to that ticker. So why don't I just stop trading all these BS, you know, OTC stocks that are moving maybe a half a penny or a penny, and start focusing on these like listed volatile stocks that seem to be reacting well to CEI? And it gave breath to one of my biggest trades. Like I missed CEI in the short in the fours, but you bet your ass when it, you know, bounces from 80 cents to $2.40 and sets up that kind of bounce short type look, like that's where I actually nailed, and that's where I had conviction, because we're no longer spiking to new highs. Like we're coming off of drastic, you know, what would look to me as backside of the move, like no ifs, ands, or buts about it. It's very objective. Like this is no longer consolidating near its highs. It's all the way down to 80 and then a 300% bounce in a day and a half of action. That's a bounce short to me. And I actually feel much more confident about that entry, even though it's not like the highs, even though I'm not shorting 4, like I feel better about how the daily chart looks. And at that moment when, you know, Zach Morris is out and the short report is out and who may be still buying, who probably is selling, right? Like I can draw such a different dynamic. It's, you once taught me, again, I always come back to your teachings. It's like, I'd rather be $2 late than 50 cents early. And this is such a good example of that, where it's like, okay, yeah, I missed 4 and I'm $2 late to the party, but there's still a lot of meat on that move. It's still a very volatile mover. It's still moving 300% in a day and a half. Like you don't need to top tick to see you. And you always just say like, stay with the play, stay with the play. There might be another entry, same day, days down the line, depending, you know, every scenario is independent and unique. But that short was more clear as day to me than, and more confident for me than anywhere in the 4s and 3s, even though I get the idea up there as well.
Oh yeah, no, you're totally right. And it's so funny how that works. Like like it's a much worse price, but it's a much higher odds play.
Right.
You know, like it goes back to big picture, right? Like you look at big picture, and when you're shorting it in the mid 2s on that day, like who's buried? The longs over the last week or two. Like they are smoked. They are looking for an out. Whereas like if you're going after the front side of 3s and 4s, you know, shorts are still screaming.
Short are smoked, right? And just understanding where that psychology is, where the buyers, where the short sellers is, like, it takes like a year or two to figure out, but like that's the name of the game, right? Where's the supply and where's the demand and who's about to get out? And once you can kind of start to visualize that and envision it before it happens, like that's where you start to learn where the squeezes might be, where the falling knives might be, and you can start to plan trades around which side is going to have a more explosive move up or down. Because, you know, sometimes a breakout can be a breakout and it also can be a short and resistance. Which side of that, you know, trade is about to be more explosive is what you probably need to figure out over the next years of your career. We got 10 minutes left. We all have some things to do tonight. We want to open it up to questions. You know, Tim Grittani, we don't have him here very often. We do have him here. I'll be watching the chat. If you guys have, really don't want to get into like the ins and outs of his trade, but more like here he is. You have his brain, his psychology. Like if you guys can ask a question that isn't like, what do you think of this stock? I prefer the not what do you think of the stock. Like I'll probably ignore those questions because he's probably not looking at the stock, to be honest.
I couldn't find the chat on the Twitch, so you want to just read them to me?
I'll read them to you. There's a chat button, but I know technology isn't your thing, even though you can create.
Not anymore. Yeah.
Here, Huddie, I'll start with a different one. Someone asked, PROG had a $20 million offering on October 1st. It is back at the breakout level. Are there good offerings that make you willing to trade a ticker with a recent offering?
I mean, something like PROG, and I'm pretty sure I know what chart you're talking about because I think I saw that one today.
Yeah, it did recover quite well.
Wow. Is that gapping up after hours? It was,
Yeah.
I think, when I looked at it last. I don't know what it closed at after hours.
It was just the first green day that went to a breakout type scenario.
Yeah, no, like, so something like that. The recent offering is a little bit in the back of my mind, but, look at the volume on that daily chart. Look at the overall daily chart picture. Like this is a pretty classic case in my mind where technicals trump fundamentals. So if I'm seeing something like this, so that I think that the candle you're showing right there is where it closed after hours, 2:31.
Yeah.
Okay, so like its actual regular market hour close was like 2:15 or something like that, I think. And I wasn't looking at my scanners, I didn't see it, which is too bad because I probably would have bought it. Because I love the volume. I love the recovery, and it's always nice to see something gapping up and looking a little strong continuation. So I don't know the details of their offering off the top of my head. Like it was $20 million, you said. I don't know what they priced it at. But anytime you've got something, I'm assuming it's well above the offering level right now. So in a case like that,
it is. I think $140 or $150. I don't remember exactly, but I remember that offering coming out.
Yeah, I mean, I'd be thinking fully long last right now.
Yeah, and again, it comes back to the volume, right?
Out and then look for a backside short type of thing. That'd be my thought.
And I love, this is a bigger company, so I love how this one moves a bit better. It seems like it's kind of moving in a very clean fashion right now, actually. Yeah, again, it just comes back to the volume. Like I remember like looking at Prague, like, I don't know, a week ago when it broke out of $125 and saying like, wow, like that's a lot of volume that you're trading all of a sudden, kid. Like, what are you doing? Yeah. That always perks my ear up, volume. It's so important. It just tells you so much, about what's going on.
And this is what I think is funny, because this is one where Huddie would say Grittani would buy the breakout over 220, but Dom wouldn't touch it. And that if there was no offering, like pretend just fully technical, you would buy this with this price action over the breakout level?
Especially near the end of the day, yeah, because I think there's such a good chance of a gap up. And then next morning, I wouldn't take my CEI plan necessarily where I'm like, oh, if it opens red, I'll be okay with it. I'd probably just be cutting it. But like something like this, that chart you just have it pretty good actually.
Go back to the intraday.
If you can show me something with intraday ticks.
Is it up?
Like just that afternoon consolidation above the VWAP, that would be my risk area. That'd be where I'd be looking to get in. Like, if assuming that it did break out. Well, I guess I said if I had seen it, I would have bought it potentially because it was so close to the breakout level going into the close. But
so you would have bought it over these highs.
That afternoon consolidation, the lows of that consolidation, VWAP area, that's my risk level. And then I'm trying to gap it next morning and stay patient. If it gaps up, give it a chance to have a nice morning spike to sell into. And if it gaps down, I probably just cut and move on.
And for Dom, it's so different. You would never be buying the high. And it's so
I'd
cool.
Have to, yeah. I'd have to be buying here would be the last spot I could buy over 190s. But I'd still risk that 170s, 177 area. And then I'd probably leave risk on that till the morning because I could definitely see shorts it getting stuck up here in the low twos into that resistance level. So yeah, I don't know.
So what was that? Was that like an afternoon 190 break? Is that what I just saw on that chart?
Yeah.
Like that's potential entry spot, even though it's like still slightly under the daily resistance. It's still so close. And
yeah, that's the way I would see it.
The strength is there. So yeah, I mean, I kind of agree with you there. Like that might be the more ideal spot than chasing the spike up,
Yeah,
I play with that too because I know your afternoon high of daybreak set up. I know the market cap of Prague, which is over 100 million. So
yeah,
I know
that's a little higher
volume
market cap. That's the only thing.
I think volume kind of trumps that whole idea. But sometimes, yeah, I definitely look for your afternoon high of daybreak setup within a multi-day break. Like the more setups that align, I think the better. The more eyes you're going to have on a setup, and it increases the odds of it going.
Right.
Definitely. You got another question, Dom?
I can find one. There's a lot of words, but none of them are really good questions.
Someone asks, what are percentages short biased, all three of you? I don't think you can quantify that, can you?
What was the question?
How short biased are you?
Not very.
I think that I'm a lot more hesitant to buy things than short things. Because with longs, I think it's a lot more predictive, where it's like, oh, what's going to turn into the next big runner? Whereas for shorts, you've already got the big runner that comes to you, you know, where it's like, oh, hey, that daily chart's crazy and extended. And if I dig
And I
that's
agree.
garbage.
The words I use to it is like, I think a short is like much more of an objective view, and longs like bringing a lot of subjectivity to the equation. Like, how does the news look? How does the share structure look? Like, you know, is Wall Street bets on it? I mean, whatever variable you want to attribute to a long and the reason why you're buying it. Like, there's a lot of things that you could attribute to a long, but with a short, it's pretty much more like, is this crazily extended? And like, does it have room for downside? And like, can I find a good risk reward spot to take it back down? Because I don't think it's going to zero, but I think it needs a pullback, you know, and that's much easier to just quite visually see than sometimes a long before it breaks out.
Yeah. Like I think that with my trading, at least, my risk reward is a lot better on longs. My win percentage is a lot better on shorts.
Yeah, I take far fewer shorts and my win percentage is through the roof. But I wait for my shorts. I wait. Yeah. I hate getting caught in a ride. I hate it. I'm so over it. Like,
yeah,
God, I'm so over it, you know? Like I used to just short anything like up 100% multiple days. I used to just short like the first red day, and I'm like, nope, that's not enough for me. Like I want like something that went on a run for a month and really went like and did that supernova candle. The last thing I shorted CEI really well. Before that, it was like SPRT in the 30s. Like I want something really unique that's like, you know, take small size and still make really big gains while controlling. Like that was SPRT, and was it? That's not it. That's CEI.
That's not a ticker anymore.
SPRT?
Isn't that isn't that a different ticker? Is that ARQQ now or?
No, it's probably
like it changed.
Yeah, but I think you can still see the chart.
No, it won't let you see anything.
That's the chart. No, okay.
That's
greed. Anyways.
Oh, there's the chart.
That's it.
For Grittani, after the largest loss of your career, what did you do to get back on track?
So the first thing I did was so first I went on tilt and I tried to trade bigger. And so my largest loss was 290K. And then I went a little crazy and I think I made back 60K the next day on a different ticker. And then I lost that 60K again the next day. And then I kind of took a step back and I was like, what's wrong? What am I doing? And so I took 2 weeks off. That was the big like number one thing I did was I took 2 weeks off and I just kind of emotionally recovered and reset mentally.
You're in the washing machine.
It helped that biggest loss of my career was like a quarter in my year. So it wasn't like catastrophic, like, oh, I just blew up an account. Like I was still up on the year and everything. So it was a little easier to like reset mentally and go to a place of like, look at the year as a whole. I'm still doing okay.
Right.
But, you know, at the time, I wish I'd been a lot better about getting some better risk management in place. It was more like I took the time off and I was like, okay, I'm just going to like not let that happen again. And it was kind of like a vague goal. Like, oh, let's just be more careful and get back to doing what I typically do. But, you know, because there were flaws in the way I handled my risk management, of course, I found myself in the situation again and again and again. So down the road, I had to really specifically address my issues and make a change. And I've got a little like YouTube series on that where I do monthly recaps from November of 2015 until July of 2016 or something, where I'm walking through like my lost journal and, you know, all these things I'm doing to try to get myself back under control because I've just been so undisciplined for so long. But yeah, just getting back to the original question, I really think a good step one is some time off. That was one consistent thing that I did with, you know, pretty much all my big losses. was I took some time to catch my breath, because otherwise I knew myself and I knew I was going to just go nuts and do lots of dumb stuff.
And you bring up a good point there, guys. If you are struggling with sizing in, if you're taking bigger losses than expected, or if you're not sized in appropriately, it's a great place to go kind of learn from someone else's mistakes and build towards your own, again, future. I know that when I was having a hard time sizing in, like Grittani immediately directed me to his monthly trade recaps where he sized back down and practiced like proper sizing in and handling those trades. And he did it for like 7 months. And I'll tell you what, like Grittani, those are amazing, amazing pieces of, not only do you get like insights to Grittani's like setup that he likes to trade, but he quite visually shows you like how he likes to size in, the reasons why, and gives great descriptions as to each trade and what went wrong and what went right and what was like the common factor that was causing him to have a loss or a good win. So again, if you're having a hard time sizing in, like I strongly recommend you, they're on YouTube, anyone can find them. Tim Grittani Loss Journal is what I would search. And again, like it helped me big time learn how to size in. I was undersized. My problem was undersized and your problem was oversizing. So it doesn't just like, it casts a wide net with what it can help. I would just recommend checking it out. You see any more questions?
It's an interesting one. Tim, if you could only trade 3 months a year as a human, what would those months be?
Probably December, January, February. I feel like winters are always really crazy.
I think that's the ones I would pick too.
Yeah.
And I'd love to have a November too, I think. But
yeah, give me a 4th month, please.
Thanksgiving I find to be always kind of a fun time to trade. For whatever reason, that week where it's like 3 days of trading and it's like 1 day is shortened, maybe. I don't know. That week, I've seen some wild stuff go down. It's usually really illiquid and like hard to play. Nonsense. It's illiquid and hard to play usually. Like you get like a crazy runner that's like you don't know what to do with it, but it's like fun to watch in that moment. The holiday trading.
Yeah, for sure.
All right, well, I don't see much other questions. Again, I don't want to get into specific tickers. So, Grittani, thank you so much for spending the time with us.
Yeah, thank you for having me on. It was a lot of fun.
This is all for just like, again, giving you insights to the different minds of trading. And all of us trade very similarly, but also differently. We used each other's knowledge, not really each other, but we use Grittani's knowledge to shape our own trading strategies. And again, we just want to give you guys insights to the way, like how he trades, not necessarily what he trades, but how he thinks about going about trading. Again, that's what stock therapy is all about. It's not like us telling you what to trade and what not to trade, like make your own decisions. But oftentimes it's not like the trading that's the hard part. It's how you deal with the mental aspects of trading. And like, you cut before your risk was broken or you oversized or whatever it is. There's so many different variables that are going to define your trading. And what's also so funny, what I've realized after doing this whole episode with you, Grittani, is like just a couple trades in your career kind of define you as a trader. Like I think everyone knows about LAKE. I think everyone knows about Nordstrom's or whatever it is. Like it's so funny that 6 years later these things still haunt you. And you've also had some great wins. I mean, we can talk about CVSI and GRWG and like, but for some reason we don't talk about those. We talk about the bad ones.
Those are the best lessons for sure.
Yeah. So anyways, thanks for coming on. Thanks for taking an hour with us. I'm sure, people that are watching this right now gain some kind of knowledge, about something, I hope.
Yeah. Thanks again, guys.
Yeah.